So today, team, let me share the screen. Let me share the screen. So you can confirm if you're able to see the screen. I'm sharing the screen. So you confirm if the screen is showing that side. Are you able to see the screen?
Yes, coach.
Okay, so now this is a chart. This is a chart. This is a chart. This is a trading chart. And the pair that we are looking at, in this case, we are looking at totality 25, okay, V25 index. Okay, so now, what you need to understand when it comes to trading is that there are just three things that you must focus on. The hardest part in trading, it is the trading psychology. That is the hardest part. So there are three things that you must just focus on. So when we are trying to learn on how to trade, or if you are aiming to become a profitable trader, if you are aiming to become a profitable trader, who is a profitable trader? A profitable trader is a trader who makes profit consistent. You are into this business to make profit, not to lose. So if you are doing a business and you keep losing, then it is better off to stop the business. Why are you doing a business which is making you to lose money? All of us, we enter into a business in order to make a profit, not to start losing. Yes, risk is involved in any business. You might lose one from point A to point B, but not to continuous losing. Then the business, it is not good for you. So in trading, we need to learn on how to trade so that we become profitable traders. So profitable traders, a profitable trader is not about how much you make. No, but it is how consistent you are making the profit. It could be $10 per day, it could be $3 per day, it could be $100 per day. But what is most important is how consistent are you making per day? Consistency in 3 months, you are just making profit without losing. You can lose, but you can still recover and make profit. So that is what we must focus on. Now, there are only three things. That is number one, trading psychology. Forex, it holds a lot of trading psychology. That is where you must learn and train your mind very well. Trading psychology, because we are dealing with a business where you can lose money in seconds. We are dealing with a business where you can use money in minutes. We are dealing with a business where you can lose money. The money you are looking at the money you are losing just like that. So it calls for a lot of trading psychology, because when it comes to losing, we develop a lot of fear. Now, apart from fear, this is a business where it is easy to make money. What do I mean by easy to make money? It only takes seconds to make money, because any tick or any pip or pips, any pip, it counts, it is money. 0.0, 0.01, those are monies that you are making. So because of how easy it is to make money, how hard it is to maintain profit because of psychology, how easy it is it makes people to become greedy. Greedy, it causes people to become greedy. It is easy to make a $10 in Forex trading. It is easy to make $100. Within just 1 hour, you can make $100 in trading. Within a minute, you can still make that kind of money, depending on the skill that you have. Now, hence, because of that, it tends to make people become greedy. Okay, so this is where now we need to work on psychology, trading psychology. Now, apart from trading psychology, all you need to work on, it is the risk management. Risk management. So risk management is very important. So work on trading psychology, know how to deal with emotions such as feelings, these emotions such as fear, greedy, excitement, FOMO, fear of missing out. All these, as you want to become a profitable trader, by all means, try to work out, try to know how to control and manage these emotions. We can't do away with these emotions, we are human beings, but we can learn on how to control them. Apart from that, risk management. So risk management, it is very important in trading. Why? Because if you don't know how to protect your capital, you end up losing your capital. Then for you to trade, it is a business which depends on capital. If you don't have capital, the only thing that you can do is just watch the market. You can't do anything. Or you can trade in the demo account. Now, the money that you are making in demo account, it is not real money. You can't withdraw it. So trading risk management is very important. Now, risk management, you need to be focusing on these three things. Number one, risk planning. You must plan your trades. Before you enter a trade, you must take time to analyze the market, to start the market. Before you enter, you already know how much you are willing to lose. Before you enter, you already know how much you want to take from this market. Hence, you not overtrade, because even before you entered, you already knew or planned with how much you make. Even you not even have fear, because when you entered, you already knew how much you are willing to risk. So if you enter, then you wanted to risk how much? You wanted to risk, let's say, you wanted to risk $20. You enter a trade, then you are in -10. You will not be afraid, because you already know to say, in this particular trade, I'm risky. In this particular trade, I'm willing to risk how much? $20. So you not fear. So risk planning is number one. Number two, you need to look at risk ratio reward. Risk ratio reward, it is very important, because you are looking at the potential when you enter. How much percent will I get when I enter? And how much will I lose when I enter? So you are looking at risk ratio reward. Meaning, before before you enter a trade, your reward should be more than your loss. So if you analyze the market and you discover to say, when I enter this trade, I'll make $10 in this particular trade. When I enter in this trade, if it goes against me, I'll lose $10. I mean, I'll lose $5. Then you can enter that trade, because there is higher potential of making profit than what you lose. But if you analyze to say, if I enter, I'll make profit of $5, and if I enter, I'll make a loss of $20 or $10, don't enter the trade, because your risk, your loss is more than your profit, your take profit. That is what is known as risk ratio reward, which is falls under risk management. So risk management, it has got three categories. Risk planning, which I've talked about, risk ratio reward. Then number three, this is now position sizing. You need to know how much are you in any trade, looking at your capital, how many positions do you want to open, and the lot size, and the lot size. So these are some of the things that you must focus on. Then number 3, we have talked about trading psychology. If you want to become a profitable trader, you must learn more about trading psychology. Number 2, risk management. Actually, let me emphasize, when you are doing business, the focal point, the focus, it is to protect your capital instead of making profit. Okay, because it is from the capital that it will help you to make profit. But if you focus to make profit, then you don't know how to protect your capital. You end up losing a capital, and the same profit that you want to make, you will not be able to make it. So the number 1 goal when you are trading, it is to make sure that you protect your capital. That is no wonder risk management is very important. Okay. It is very important. Capital, it is to protect. Don't risk more than 2%, or if your risk appetite, it is up to 10 at least, but we recommend 2%. But if you have a small account, that 2%, it might be small, but at least don't go more than 10%. 10%, the one that you can risk. So if you have $100, 10% of 100, that is $10. So meaning if you lose in a single trade, you remain with 90. It is easy to recover the $10. But if you risk it from 100, then you lose $50. Half of your capital, it will give you emotions. Then you begin to want to revenge, and it is very hard actually to recover halfway. So protect your capital as much as possible. Now, apart from trading psychology, risk management is what is known as a strategy. There's what is known as a strategy. If you're able to get me, if you're able to get me, what I've explained so far, can you type 55 in the chat box? Type 5. If you have gotten what I've said, just type 55 in the chat box. Can I have some 55 in the chat box if you have gotten what I've said? If you have gotten what I've said, can I have some 55, 55, 55? If you have gotten what I've said, can I have some 55 in the chat box? 55 in the chat box, 55 in the chat box. Okay, so now let us continue. Let us continue. So now, apart from what I've talked about today is these things are very important if you want to become a profitable trader. So a profitable trader, like I have said, it is not about how much you are making, but it is how profitable you are, how consistent you are making. It can be $3, $10, as long as you are making that money consistent, you are making profit without losing your capital. Okay, that is a profitable trader. Okay, so that is what it means to be a profitable trader. Now, apart from trading psychology, which we have talked about, and apart from risk management, there's what is known as a strategy. So a strategy, it is something that you must apply in order to enter a trade. So you can't enter a trade if you don't have a strategy. Then you'll be beaten you'll be beaten. So the strategy, it is something that you must use in order to enter into the market so that you can make profit out of the market. You can't be a police. You want to catch a thief, then you don't have a strategy. Then you will not be able to know that. So if you want to catch a thief, there's a strategy that you must use. Okay, as a police person. Okay, if you are going to fight, you are going to war as a soldier. Okay, militaries, they also have a strategy that they may use. If you are dealing with this category, they have a strategy. Okay, even to kill rats, you need to have a strategy. You can use the logo, you can use anything. Okay, so when it comes, even footballers have a strategy. Now that strategy, which is also known as a skill, okay, that is the skill that is known as a strategy. If they reach near the goalkeeper, they will know to say, okay, this is a strategy which I need to apply, or this is a skill that I must apply to score. When I'm with the two defenders, I need to do that. Okay, same applies with anything that you might be doing. So it also applies with Forex. So you need a strategy. So a strategy, this is where now you need to know to say, if the market condition, it is ranging, what kind of a strategy should I use? Okay, if the price is on the support, if the price is if the market is it is trending, it is an uptrend or it is a downtrend, what kind of a strategy should I use? Now there are a lot of strategies that you can use. Okay, so one of the strategies you can use breakout. So breakout, it is one of the strategies. So this is a breakout now. Okay, you can follow on the screen. So breakouts, for example, we are looking at this. This is this time frame. This time frame is 24 hours, which is D1. Okay, D1. So this is a chart. This is a representation of buyers and sellers in the market. Buyers are represented as in red candles. Buyers are represented in red candles. Okay, we are now talking about a strategy. So this is now one of the strategies which we want to look at. It is breakout. 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 It is one of the strategies that we want to look at. Okay, breakout. So this is a trading chart. So a trading chart, it is this is where we see to analyze the market to know how the prices are behaving. Okay, and I'm using I'm using what is known as the trading view. Okay, I'm not using MT5 trading platform, but the one which I'm using to analyze, I'm using a trading view. So a trading view, you can use it to analyze your charts very well. Okay, so we are looking at V25. Okay, this is a pair, one of the pairs. Okay, V25. Okay, now the time frame we are looking at 24 hours. So we are looking at the all 24 hours. Okay, now bear in mind is that when we are looking at 24 hours, we are looking at the candle, how it has been behaving the past 24 hours. Okay, we are looking at the history. So in these candles that we are seeing, so all these candles that we are seeing, green, red, each of them, it took 24 hours to form and to complete. So this is the entire history of the market. Okay, now the current candle, it is at this particular point. So when I zoom in, the current candle that we are looking at this particular point, the price is here. This is the price. The price, it is here. Let me try to get a pointer. Let me try to get a pointer. Okay, this is our point. The current price, we are looking at this candle here. We are looking at this candle. This red candle here, have you seen? The one which I'm pointing, this is a candle that we are looking at. Okay, so in 24 hours, we are looking at this candle. So this candle, for it to form, for it to reach where it is, it took 24 hours to form up to this. It started from there up to here. Okay, 24 hours. But these other candles that you are seeing here, it is just showing the history. So all these candles, as long as you're looking at in 24 hours time frame, all this candle, this green candle, it took 24 hours to form. It took the all 24 hours to form. This green red candle, it took 24 hours to 24. So all these, they took 1 day for each to form. But the current candle, it is this candle here. But when we're analyzing, we are looking at the entire market from here. History, it helps us to make decision. It tells us how the traders have been behaving in the past. Then we'll know where this market might go. Okay? So this knowledge of looking at the history is known as price action. Okay, so price action. This is a kind of trading where you analyze the market by looking at the history, how the behavior, how traders have been behaving in the past, because people, they behave the same. So by looking at how they have been behaving, then it will help us to know that even in the future, they will still behave the same way. Okay. Now, one of the strategies that we talked about is breakout. So breakout, it is one of the strategies that we are going to use. So now this is the current price. So now what do? We must identify our support. Okay. We must identify our support. So in this case, we'll look for a horizontal line. So we'll look for horizontal line. And the horizontal line, we'll put it here. We'll put it here, okay? We'll put horizontal line there. Let me try to delete this. Let me remember, one of the strategies that we want to talk about is the breakout, okay? So breakout, you can use the trend lines to trade breakout. You can use trend lines to trade breakout. Apart from trend lines, you can also use support and resistance. You can use trend lines to